Hi everyone, welcome to practice problem SCF-01. This one is going to test your knowledge of the elements of the indirect method statement of cash flows. So here we go. Which of the following are elements of the indirect method statement of cash flows, and where does each element appear on the statement if it is one of those elements? So take a moment, pause the video, see if you can figure this out on your own. When you're ready, come on back and I'll walk through the solution. All right, welcome back. So let's just go down from A to I, see if we can identify whether it goes on the indirect method statement of cash flows, and if so, where it goes. First up, net change in cash. That does show up on the indirect method statement of cash flows. It shows up at the bottom, usually the second line from the bottom, because you have the net change in cash, then, the third line from the bottom, because you have the net change in cash, then you have beginning cash, you add the two together, and you have ending cash. So it's usually around the third line from the bottom. B, cash paid to employees. This would actually not appear on the indirect method statement of cash flows. The reason is because cash paid to employees is an operating activity that involves an expense, salary and wage expense. It also involves a cash outflow, CFO, and therefore this would actually already be wrapped up in the net income number that you begin your CFO section with. So this line right here, cash paid to employees, that wouldn't show up on an indirect method statement of cash flows. How about cash received from selling equipment? This would show up because this is CFI, cash from investing. Specifically, it's the proceeds from selling PP&E, so that's an investing activity, and it would show up in the appropriate section. D, decrease in accounts payable. This would show up in the indirect method statement of cash flows. It's going to show up in CFO as an adjustment to net income. So when your accounts payable goes down, it suggests that you paid off some accounts. You paid off, say, some suppliers. That doesn't involve net income. That doesn't involve revenue or expense. So that would not already be in the net income number that you start your CFO section with, and therefore it would be an adjustment. Specifically, it would be a decrease, or I should say subtraction from, speak in mathematical terms, subtraction from net income, because it's a cash outflow that was not already included in net income. All right, next up, cash received from issuing stock. That would be on your indirect method statement of cash flows. Specifically, that is part of your CFF, your cash from financing. How about F, decrease in prepaid rent? This would also appear on your indirect method statement of cash flows. Again, this is a CFO item. A decrease in prepaid rent suggests that the prepaid was used up. The journal entry for that would involve a debit to rent expense, a credit to prepaid rent. So that will have affected net income. In fact, it will have reduced net income. However, that didn't involve a cash flow. And so we're going to have to add that back to net income. So add back to net income. So that's going to be an adjustment to net income in the CFO section. How about G? A cash advance received for future services. This would also appear on the indirect method statement of cash flows. So this suggests that you are getting money and you are recording an unearned revenue. You owe somebody a service. So you have received money from a customer. That is a cash inflow from operations. But because you haven't done the service yet, you don't recognize revenue. So this didn't affect net income. So this is going to go in CFO. And because it increases your cash from operations, but it's not already included in the net income number, you are going to add to net income. Retained earnings. Retained earnings does not appear anywhere on the statement of cash flows. That is simply a balance sheet item. And then finally, I, cash paid for current period utility use. This will also not appear on the indirect method statement of cash flows, because if you are paying cash, that means credit cash, for current period utility use, that means debit utility expense, that means you had an expense that lowered net income, you had an associated cash outflow from operations, therefore this is already included in the net income number that goes in the CFO section, so you can simply ignore this. You wouldn't actually see that line on your indirect method statement of cash flows. All right, that one is a tough one, especially if you're not comfortable with how cash from operating activities is done under the indirect method. But hopefully this kind of put your knowledge to the test, and hopefully you got something from it. With that said, I hope you join me for another video.